One of the stocks that's held up surprisingly well in 2025 is Rivian. The company was even up for the year just a couple of weeks ago, now down about 11% total in 2025. But that about matches where the market is right now. And I think there's actually a lot of bad news that has come for Rivian. It's not just about tariffs. Yes, tariffs would probably make the company's costs higher, but Rivian may actually be in a little bit better position than a lot of its other US based competitors. The bigger thing is the macro picture for Rivian. Are people going to be able to afford a 70, 80, $90,000 vehicle in a year, in 2 years, as they start to ramp up production of the R2 and R3 vehicles? On top of that, remember, Rivian is reliant on $6.6 billion in loan guarantees from the US, but it doesn't actually have that money yet. So if it's ever going to build out its Georgia facility, it's going to need to get that cash from the Trump administration. And I'm not clear that that's going to happen. On top of all of that, we don't know what's going to happen with the electric vehicle tax credits and all the other subsidies that were part of the Inflation Reduction Act. Those could be potential headwinds that would hurt the company even more. So I want to highlight the company's financials just a little bit, but I think it is time to look at a little bit of a bigger picture. What sort of competition is coming to the market in electric vehicles? Because the biggest problem that I see with Rivian right now, that we already see in the numbers, is they do not have enough demand for the R1 vehicle to fill the current Normal, Illinois facility. That was the plan with R1. They were going to reach capacity. 200 to 215,000 vehicles per year is what they were supposed to be able to make in Normal, Illinois. But they didn't have enough demand to do that. They're going to sell somewhere around 50,000 vehicles again this year. And then next year, as R2 starts to roll out, that will start in Normal, Illinois to try to fill up that plant, try to utilize some of the space that they already have. And then Georgia starts to come online 2, 3, maybe 4 years from now, depending on what happens with that project. So let's dig into the massive headwinds that I think could be at least 50% downside for Rivian. And remember, when the stock starts to drop, it's going to make the company's financial future even trickier because there is debt on the balance sheet. If they need to go back to markets to raise money, they're not going to be able to probably do that with debt markets. They're going to have to go to equity markets, and a falling stock price is like a downward spiral for Rivian if that ends up happening later this year. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I want to start with some of the competition. I'm going to put this into context because we need to think about what Rivian is actually making and what consumers are going to choose. We've seen this with Tesla over the past couple of years. Tesla is not the only game in town when it comes to electric vehicles anymore. So as that competition starts to come to the market, their sales started to flatline a couple of years ago and now are in decline. Rivian is bringing new products onto the market, but so is everyone else. Let's start with what Rivian itself is bringing to the table. The pricing is hiding right here in the top left. You can see that it's coming in 2026, looking at about $45,000 to start. So probably $45,000 to $50,000. It was pretty hard to find those really low cost R1 vehicles. So most of those will probably be 50 plus. That'll probably come in handy. That'll be a good comparison number when we look at some of the vehicles coming in just a second. But this is going to be a 5-seat vehicle, a pretty standard SUV size without a third row. The R3, not as many details about that, a little bit smaller vehicle, probably a little bit lower price as well. So what is that going to be comparing to that's already in the market today? Well, we already have the 2025 Equinox EV. This is going to be pretty similar range performance. Starting price, $35,000. So this is already going to be a much lower cost vehicle than the R2. No, it's not the same vehicle. It's not the same size. But again, once you bring more competition into the market, you split the market into multiple pieces. Now you got to be competing for your specific niche. And I'm going to get to this in just a second, but the question is going to be, how big is the niche that Rivian is trying to fill? Another one, very similar vehicle, is going to be the 2025 Buick Electrica. This Buick brand is really growing on me. So we'll see if I eventually break down and buy the same kind of vehicle that my grandpa drove for 50 years. If you have not seen the ID Buzz, this is actually one worth checking out. It's like a giant van, starts at $70,000. So a little bit different price point, going to be more competitive with something like the R1. But I think when you sit in those two, if you're like me and you have 3 kids or more, the ID Buzz is a much more practical vehicle for that specific use case. That, again, is going to break down your market into different pieces. If you're only into electric vehicles and there's only one 3-row option like there was for a long time, that was the Rivian R1, well, you're going to win all of that market. But now you start to bring more competition in. Now there's more options for people to think about. The ID4 is kind of the same thing. They say here starts, this I guess this is the ID4 Pro, starts at $45,000. You can go and get an ID4 for something like $35 right now. One that we haven't seen come out yet is the Scout. This is made by Volkswagen. Actually, the ECUs, the partnership that they have with Rivian, is going to be underpinning the architecture of this vehicle. So you're going to actually get some Rivian components in here, but it's not going to be the same benefit because this is a Volkswagen-made vehicle. But it is bringing more competition to the market. You also have the Kia EV9, starting at $55,000. This is a bigger vehicle than you would get with the R2, maybe a little bit more compelling price point because this is a third row. So the bottom line is there's a lot of vehicles expected to launch probably before the R2 does, and these are all electric vehicles. So keep in mind that Rivian wants to make about 600,000 vehicles that'll be about the end of the decade when it completes its Georgia plant. So they'll have the R1, the SUV and the truck, the R2, and the R3. I've done videos in the past that show that I think it's going to be very hard for the company to be profitable at that scale with their current cost structure. They're basically trying to vertically integrate their business. And I think that's going to be a terrible strategy because they just don't have the scale to be able to do that. They need to be able to make a few million vehicles per year if they're going to be developing all their own autonomous driving systems and all their ECUs and all of that kind of stuff. Now, some of those costs are going to be put off on the VW partnership, so that could be a potential tailwind. But the traditional auto business is going to be very cost intensive to try to even get close to positive free cash flow, which they haven't gotten anywhere close to yet. But let's look at what sort of volumes they're going to need to get to. They know that they can sell about 50,000 R1 vehicles, so that leaves about 550,000 R2 and R3 vehicles. How many of those would we need to see sold in the US to be able to fill their manufacturing capacity? Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Well, we're not going to get anywhere near this is from data from Car and Driver, from the F-150 or the Silverado. These are the most popular vehicles in the US right now. GMC Sierra is going to be very similar to the Silverado. Toyota Camry, Nissan Rogue. What I think you want to look at is how many Jeep Grand Cherokees, Jeep Cherokees, and Wranglers are sold. That's going to be kind of your three comparisons. That's going to be the niche market you're trying to fill if you're Rivian. And you can see that the Jeep Grand Cherokee last year, 216,000 units sold. So that would likely be the product that fills the R2 spot. R1, 50,000. R2, if they're able to get to the scale that the Grand Cherokee is, this is a very common vehicle in the US, that would get you in total above 250,000 units. That leaves 300,000 units for the R3. And this is where I think you see a fundamental problem for Rivian. Are they going to be able to be more popular than a Toyota Camry with either the R2 or R3 or the GMC Sierra? I just don't see a way that they're able to do that. And on top of that, even if they get to 600,000 units sold, it's not clear that they're going to be able to be profitable at that sort of scale. The company is burning over $4 billion from operations at this point. That changed in the last quarter, but that actually included $2 billion in prepayments from the Volkswagen partnership. So we're still at about that $4 billion run rate of operating cash losses. That's because the company's losing money. So it's on every single vehicle it sells. And look at this long-term debt. Now remember, the Georgia facility is going to cost somewhere around $5 billion. In the meantime, they're going to lose several $billion per year in cash flow just from operations. Even if you add in the $6.6 billion Rivian's expecting from the US government, that's going to be a very tight cash position. And on top of that, the company's going to have $10 billion, more than $10 billion worth of debt, because that $6.6 billion from the government does need to be repaid. That is not a grant. That would be a loan. So if you add all of this together, the struggles that they had with their current operation, the competition that's coming to the market, the fact that they would have to fill a massive niche with the R2 and R3, the fact that R1 is not selling well, the fact that they need to get that $6.6 billion from the US government or Georgia is not a possibility, and the potential for a downward spiral with a high debt company that's going through a significant amount of cash burn. If that stock starts to drop, what are they going to do? If the stock goes to $3, $4, $5 per share, they're going to have to continue to dilute shareholders. That's going to create a downward spiral for Rivian. I just don't think this is a great environment for the company. If the economy does slow, particularly in the US, even if we have a global recession caused by all of this tariff nonsense, That's going to put Rivian in a terrible position because people are not going to be able to buy more R1 vehicles, much less R2, as more supply comes to the market. Those margins are going to get squeezed for everybody. You want to be in an automaker. If you are investing in auto stocks at all, you want to be in a company that's profitable, that's generating cash flow right now, that isn't going to be reliant on future sales that may not arrive, because we have played this game with Rivian before and they have disappointed us. And I don't think heading into potentially weak economy for the rest of this year and into 2026 is the best place to be. But let me know what you think about Rivian today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.